The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the May 22nd. Fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a terrific Thursday. Let's make sure that you and I do everything we can, have an extraordinary Friday, a wonderful weekend, an extended weekend. We won't be back with you until Tuesday, so please be safe out there. Enjoy yourself. And, of course, the easiest way for each of us to have an extraordinary day, an extraordinary moment, an extraordinary week in life is to always remember that life happens for us, not to us. That's right. When you and I, we can make that one little 2x4 shift. It means we can find a gift in every set of circumstance that life is going to go toss at us. We're going to go check out what the bulls and bears are tossing to us. But mostly, what I want you to know, and I sincerely mean this, I'm absolutely grateful for your presence here today. Now, I'm here to serve you, so feel free to pick up that phone, dial in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is the Hotel California, of course, sponsored by Tiger Financial News Network on this fabulous Friday. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow futures off 23 points, trading out at 18,235. S&P futures down 4 1/4, trading out at 2123.75. Nasdaq off 3 points at 45.25. Russell 2000 just a tad. The king of dollars is on the move, up 500 ticks right now, trading out at 95.83. We'll go take a look. We'll go take a look at the pound, the yen, the euro, all putting strength inside that U.S. dollar index. Goldilocks back a buck right now, trading out at 12.02. Silver up 11 cents at 17.02. Light sweet crude back $1.21, trading out at 59.50. Hey, a quick peek across the globe. Let's go see what we've got going on out here. Let's take a look at the FTSE first. The FTSE on fire. The FTSE looks like for another week in a row, let's put this on the weekly chart out here, is going to hold, having tested that breakout, that 69.50-60 area. We've seen 1, 2, 3, 4, 5. You've seen 5 tests in a row. Well, not in a row. We've seen 5 tests here really since the week that began April 6th, and that line of 69.50-60 continues to hold. Not exactly a breakout celebration, but nonetheless, it has not broken down either. And that is on the FTSE. Let's keep this on the weekly chart. Let's go take a look at the DAX out here, see what the DAX is doing as we speak right now. Now, in the case of the DAX, as we pointed out, both on the daily chart this week, and now we can see on the weekly chart, just that very narrow descending price channel. That price had been traveling in. The DAX has broken above that level. That's bullish. That says that it ought to at least go test the highs from the week that began April 6th, somewhere around the 12,390, 12,017 area. Has not even made a 0.382 retracement on its way down. That, folks, is strong like bull. On the weekly basis, neither overbought nor oversold, so it's got room to run to the upside. Let's take a look at Asia last night. Let's start off by looking at the Shanghai out here, up nearly 3%, 134 points out here. What has it done? Off to new highs, closing at its highs with a wide-ranging bar out there. Boy, it does not get any more bullish than that when you take a look at those stock charts. So yeah, that's just strong. And it just crushed the 0.618 retracement level. And put this on the monthly basis out here. Monthly, so you can see what we're talking about. We're coming all the way back here to 2007 from that high down to lows that came in back in 2008. And now this is a monthly chart that we're looking at. You can see on the monthly chart even, you came into a 0.618 retracement with a wide ranging bar, the widest ranging bar that we've seen to the upside inside of the Shanghai you'd have to go back into 2007 before you see those kind of bars out there. And on the weekly that we just took a look at, just sliced through that 0.618 retracement level with a wide-ranging bar. That says the 0.786 area is under attack, will come under attack. 54.28 is the target area for the Shanghai. Let's go take a look at the Hang Seng, see what it did last night. It was up 469 points. That was nearly 2% out here. Here is the monthly chart there. How about that monthly bar? How about breaking a B point with conviction? It's hard to get any more conviction than that. That's how you like to see a B point get broken. Now back to the daily time frame. Let's go see what we're doing out here. Again, it's just really been consolidating out at these upper levels out here ever since that huge breakout on April the 9th. It's neither overbought nor oversold, so this has got room to at least get back up and test the high from April 27, maybe even continue its move higher out there. And finally, let's look at the Nikkei, up 61 points. The Nikkei here last night, or no, 2 nights ago, was able to test that April 23rd high at 22.52. You closed at 22.64, so it's taken out another high. No idea what the volume behind the move was, but that says that it can run higher. You say run higher to where? Look, just on a conservative A to B equals CD basis here for the Nikkei, it would take a price up into about the 20,582 area, and that's what it is doing. So we've taken a look at overseas markets out here. We are not seeing anything that shows us any bearish signals as we speak right now, and that, of course, is at 9:12 a.m. on this wonderful May 22nd. Now, let's go take a look at our futures contracts, our markets. Let's go see what their picture is. And we're going to take a look at the daily charts. Let's start off by taking a look at the Russell 2000. What do we know about the Russell 2000 out here? It is now struggling. We've seen 3 high wave candles in a row on the daily chart. What's a high wave candle? That's where you run past it and you wave high to it. Of course, what it really means is nothing more than that. It just means that, hey, it's just waving high and it's just lost its way. So if you're ever walking down the street and you've lost your way, the best thing you could do is wave hi to somebody out there. So what's its meaning? It's just simply lost its way. Now it's lost its way. Where's it headed to? Look, it could go head up to the top of that consolidation area, 1265. Likewise, it's about a 0.786 retracement from its high. Maybe it started in A to B equals CD to the downside. At this stage of the game, I just don't know, nor do I think anyone else knows at this stage here. But that's what the Russell 2000 is. No real clues out there. It's just waving hi to all its friends and foes out there. If we take a look at the Dow futures contract, what's it doing? Look, until it gets back below 18,188, the assumption must be that it is a breakout. It's a breakout dance of a consolidation level between 17.6 to 18.2. We'll call it. What does that give you? That gives you 800 points. So that could easily give you 19,000 or so on the Dow, unless it breaks back below 18,188. You got an A to B equals C to the upside of 18,773 out there. Of course, we've seen 3, 4, 5 small-bodied candles in a row out here. It's losing a little bit of energy, a little bit of its gusto, but until it breaks below 18,188, this message is one of moving higher out there. Now today, I would say it needs to break below 18,148. That really becomes a key level. We can see we've got a new box that just has opened up for sale inside of the Dow futures, and the support line is at the old resistance line that was out there. So that 18,148 area is going to be a key level to be watching. If we take a look at the S&P futures out here on its daily basis, what has it done? Look, it broke above consolidation at 2109. It broke above the key reversal session of 2119.75. To me, that's the real key number, 2119.75. If it stays above that today, then its messages, it too can move higher. By how far? 60, 75 points above the 2109 area is really what it could move higher to, and that's its message. There is really nothing. There is not really nothing. Let's call it what it is. There is nothing bearish about the patterns that we're looking at here in the daily contract for the S&P futures. If we go take a look at the daily contract for the NASDAQ, what is it doing? It's trading inside its swing point out here from April the 27th. That swing point high is 45.55. There is nothing stopping it other than sellers out there from reaching that level out here. And with regard to candle formations, it's not exactly as if the sellers have shown up in full force out here. So a move higher today as we take a look at all of these daily contracts. That's really its message out here. What kind of move higher higher. You know, the NASDAQ was the only one of the indices, one of the futures contracts that really moved higher with any kind of bigger yesterday. I guess the ES-Mini wasn't too shabby out there. So I say it's really all about the NQ. So if we go back to it, look, any close back below 44.73 is really what's needed. And then we're not going to see that today. How do I know? I got the memo. You should have gotten the memo, too. We're not going to close back below 44.73 today. Maybe on Tuesday we open up and gap up to the downside, but it ain't going to be coming from Asia. That's pretty clear. And that's why it is we want to take a look at what's going on over inside Asia, right? Because at least at this stage here, if I go back to it real quickly for you, because you got Europe's going to close in a few hours. Then it's going to be our markets. We're going to be closed on Monday. Asia will not be closed on Monday. So what happens on Monday and Tuesday, I don't know. But Asia is going to be what leads the markets off. And if we just simply go back out here and take a look at those real quickly, you know, you were up 3% inside the Shanghai, up 1 7/10% behind the Hang Seng. And the Nikkei, you closed above a B point of an A to B equals CD to the upside, the most recent high out there. There's really just nothing bearish here. So, you know, it's going to all have to be about, well, maybe the deal is what? Maybe the deal is Greece. Maybe they exit. You know, let's go take a look at what's going on inside the currency pair. Is that really the only? So you've got Greece, and then you've got a geopolitical thing, right? You've got some type of event. You know, you've always got that event risk. We've got it seems like every moment of every day out here. I said let's take a look at the currency pair. So why did I pull up the FTSE? Not by choice up here. Let's go take a look at the euro. So in the case of the euro, was trading higher earlier this morning. It's traded off. What's the assumption behind that out here? Well, look, you know, we know that price broke out of a descending price channel out here on its real first test of that area on May 18th. It held, and then on the very next day, wide-ranging bar to the downside, May 19th. What was that message? False breakout. When we took a look at candle formations over the last 2 days, what did we say? We weren't seeing any kind of bullish reversal candle. We certainly don't see that today. What does that say? That says lower price. How low can you go? Hey, look, this is like a what do you do that thing when you go underneath the bar? What is that? That's the oh, come on. What is that? What do you do? What's that? The limbo. Thank you there, L. And so the euro could do the limbo and get all the way back below, quite frankly, that last swing point low back here on April the 13th. And that would be moving just a little bit lower, doing its limbo. But for right now, the euro is likely headed to $1.08. What's behind that move? We're going into a Friday. I don't think that Greece has got anything done at this stage here. They're just playing poker. It's likely going to be a 12th-hour deal, whatever it is that happens out there. And then maybe at that stage, it's when the euro's made that 0.618 retracement down at about the $1.08 level. Now, at a $1.08, if you see a turnaround and you see a bullish reversal signal, then we're going to likely have the beginning of a formation of an A to B equals C to the upside inside of the daily chart. Of course, the key will always be, can it break through that descending price channel out there? At this stage, the bears are the ones that are in control of the euro. If we take a look at the euro-Japanese yen, of course, you and I love to track this currency pair just to get a feel for what's going on inside our markets out here. It actually gave us a key reversal session up at the top back here on May the 18th. It's since moved lower last few days, sideways out here. No real good call on the euro until it starts cracking below that low of May 11th out there. This is Steve Rhodes with TFNN. S&P futures off 3, almost about 4 points. NASDAQ down a couple. We'll be right back.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not much change in the futures market. We began taking a look at currency pairs. We looked at the euro. We looked at the euro-Japanese yen. So we looked at the euro-U.S. dollar. Let's go take a look at the Japanese yen versus the U.S. dollar index. What we know right here is that the Japanese yen, I'll get under control, it's been consolidating ever since the time period of about middle of November 2014. So pretty good consolidation has established itself between the 116 to 122 area inside of the Japanese yen. So any breakout above or below those lines, we should expect that type of a move. The A to B equals CD pattern that could be setting up would take you into the 124 area. I'd say more likely 126, which would be equal to, I think, pretty close to equal to that consolidation. Looks like the yen is going to test that 122.02 level. Any close above that, forget about the consolidation at the 121.84. I'd have to say 122.02. A close above that, and the Japanese yen will continue to weaken against the U.S. dollar, putting some strength inside of the U.S. dollar index. So you've got the Japanese yen moving higher. That's putting strength in the U.S. dollar. You've got the euro and the pound. We didn't take a look at the pound pulling back as we speak right now. That's what's putting in the strength inside of the U.S. dollar index. The U.S. dollar index has really got no control over its direction. Its direction comes because of the weighting structure inside that basket of currencies out there. So it's really, you've got to just take a look at those three currency pairs to get a really good picture as to what patterns are in play. Now, in the case of the Great British Pound, it's been traveling sideways here the last few days. It still has an A to B equals CD pattern. That needs to be fulfilled up at the 160 level. But right now, now it's pulling back, and it is trading, just testing that B point at that 154.9 level. You're trading at 155.23 area. But a continued pullback will put strength inside the U.S. dollar index. When does that matter? Well, it matters with regard to, let's say, Texas Tea, light sweet crude. That's trading back $1.27 as we speak right now. What is it doing? Really just consolidating up at these highs, very similar to looking at, for example, the Shanghai, the Hang Seng indices. It's really the same kind of a pattern out here. Resistance inside of light sweet crude is going to be that trading day from May 6th, that little shooting star candle out there at the 63.62 level. Looks like it's content with trading with inside its market profiles right now between $70 basically and $58. I've just rounded those two up just to give you a pretty good price target. Now, question came in earlier this morning. I went ahead and posted 3 charts inside our Tiger's Den at around 7:30 or so. The question was, can I come up with do I have any conviction behind what silver is doing over the course of the next 6 months? So a little bit midterm, longer term time frame look at it. And so I posted 3 charts. We're going to go take a look at these charts. Hopefully you're following along on TigerTV, but no problem. If you're not, don't forget you can go to the homepage at TFNN.com. You can watch the archive of this show, and that way you'll be able to see this chart. Therefore, if we're taking a look at a 6-month kind of time frame, what I decided to do was to go ahead and take a look at a weekly chart. A weekly chart, and see, could I just apply some relatively easy indicators for us to utilize that you could put on your chart. So the very first one that I did was I want to understand the red line that's on my chart out here is a moving average line. It's a weekly chart out here. I just simply want to understand, was there a moving average that for the most part acted as a pretty good level of either support or resistance? In other words, when price moved above it, it was a really good indication of whether silver was breaking out to the upside, and therefore you could be looking for a bullish side, or if it broke to the downside, did that indicate that you really should not be long, maybe short. And when I put the moving average that I came up with that worked the best on a weekly basis was a 52-week moving average. That's the red line going across my screen out here. And you can see, if we take this back, and this has acted really well from that standpoint. I'm taking it back into 2003, and we can see how this level here was tested and held as support for the longest period of time. We saw one crack of that area back in August of 2007. Let's not forget, back in 2007, we had a lot of things that were just being sold. I mean, the baby was being thrown out of the bathwater. Is that how it goes? Something like that? Never really understood that expression out there, but I get the point. Likewise, when price really closed was below that here, we saw some more conviction back in 2008. That's where the baby was really being tossed out of the window there. So in any event, if we just fast forward here to where we're at today, we can see that since the time period here of about April of 2013, right? So we're talking about 2+ years out here, where this 52-week line in essence has been hit and attacked on a couple different occasions. Price never really made it up all the way there in August of 2013, nor did it in February of 2014. Got close, but no cigar. But if we take a look at back here in July 2014, hit it, rejected it, just as it has here in January of 2015. Guess where we're trading right now? Look at that. What did it do during this week? Got up there and rejected that area. Not until we see it close above that line, which right now is 1766. Can we say that there's been any change in trend inside of high-ho silver? This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 24 points, traded 18,262. The S&P down 4 at 2126. NASDAQ Composite is flat. The Russell 2000 is down a point. The DAX is off 34. The FTSE's up 35. Gold is unchanged. Silver's down a nickel. Light sweet crude back $1.13. Lead the charge to the upside. Going on a trip. It's ctrip.com. Up about 10%, 9.5%, up $6 and change. Expedia along for the ride as well. Up 5%, up 581. E-Long happens to be long this morning. That's up 32%. No idea what that is behind that. Maybe as a merger acquisition. You got Time Warner Cable up 3%, up 485. Shake Shack moving to all-time highs again up here, up $3. John Deere and Company. People love those food stocks, do they not? John Deere and Company up 340. Intuit up about $3. Baidu up $2. Corvo, QRVO. Prefer to say Jose Cuervo, but that is not the stock. That is up 2%, up $1.60. To the downside, we've got Esperan Therapeutics. That's down about 8.5%. That's down $9.50. Autonomy is down 17%. That's off $5.50. Kunar Cayman Islands down 6%, down $3. Fleet Corp off $2.56. Jume International Holdings. Boy, they're not making it easy for me this morning with my pronunciation of these stocks out here. But you know, at this stage, I pass because nobody's really checking my grammar and my pronunciation of these stocks. But the fresh market, I got that one. That's trading down $1.76. Dollar Tree's off $1. Schlumberger down $1.17. Ross Stores off 16 cents. I would say not much change out there. All right, so where do we want to begin? What do we want to take a look at? I know. Let's go back to silver. Let's go back to that chart out here because there's other patterns. I gave you the easy one to follow along on the home game. Take a weekly chart out. Go ahead and put that 52-week moving average on there. You see any kind of move above that line with any kind of conviction that holds, that gets tested and holds. That says that then we've got silver at least moving to the upside. Where would you target silver if it was moving to the upside? You'd have to target it probably right around these swing points out here from back in July 2014 in the $21 area. But at this stage of the game, it is that line is held as a resistance. If we take a look at some other tools out here, let me do this. Let's go ahead and get rid of that moving average line. Let's go take a look at the U.S. dollar index. So we'll take a look at that because we saw that if the euro at this stage here is going to go ahead and pull back with its weighting inside of the U.S. dollar index, if you believe that there is a directional correlation between the U.S. dollar and silver, then watch my screen out here because that's what it's showing you. Now, the U.S. dollar index on the bottom portion of my chart, I've inverted. That way, the directional price of the U.S. dollar should match what we're taking a look at in silver and vice versa out here. Now, as we can see, it's a pretty good correlation. There's pretty darn good reasons why you should be paying attention if you're trading silver, gold, and silver. In this case here, we're just taking a look at silver. You ought to be paying attention to what's going on inside the U.S. dollar index. So if you believe silver's going higher, you've got to be able to make that case that the U.S. dollar index is going to go ahead and pull back. On this chart here, it would actually be rising. Right now, we know it's getting stronger. That's why you're seeing the candle today move to the downside again. This is a weekly candle out here. So that's another piece of information to take a look at. Let's go take a look at our TAS market profiles out here. Let me show you. This is kind of a cool look, too, that gives you a feel. Now, this is not about trying to time the top or the bottom. If you want to do that, you need to use A to B equals CD patterns, Gartley buy, butterfly, type patterns. That's what you really need to use as good advanced warning type signals out here. And so when we take a look at these moving averages, we're using a lagging indicator. When we take a look at these TAS market profiles, we're using the lag indicator to be able to identify where there's a change in trend. But just simply take a look at the beauty of these boxes going back to the 2008 timeframe. And on the way up, if you just simply focus your eyes on that green line, that's the new levels of support that are being created. And really only one time back here, this was back in 2010, right in around the May 2010, all of these green lines formed at higher lows out there, all the way up into those highs inside silver that took in that $49 level. Take us fast forward to where it is that we're at now, at least coming off the October 2012 timeframe. Take a look at all these red lines drawn in the sand here. They are all at lower highs out there. Even the current one that we're in right now, and the current one that we're in right now is acted as resistance. So what does this say? This says even if you take a look at the weekly makeup of this profile, that it's really sellers that are in control of silver, and that says silver ought to get down and test that 58 level. So that's the look. Whether what's going to happen over the course of the next 6 months, I have no idea. But what we do know is we've got a couple of different tools that we can go ahead and use out here to help us identify when a change in trend has occurred. And at this stage of the game, it hasn't happened, at least not my eyes. Now, come on over to the Tiger's Den. You can grab a copy of those three charts out there, and then you can take a look at them yourself. Maybe your eyes will see something different, and if they are, just shoot me an email, give me a call so we can take a look at that, because 4 eyes are most certainly better than 2. Now let's go take a look at some things that are moving and grooving in the marketplace. Let's take a look at ctrip.com. And if you are taking a trip on this Memorial Day weekend, please be safe. Put that phone away. Put that phone away. Put it in that glove box and just focus on the road out there. Of any times that you drive in the holidays, it really should be all the time, but certainly during the holidays, we want to make sure that you are just focused on the road and that you come back safe. In the case of C-Trip, it's taking a trip to the upside. It wants to target the 86.49 type level out here. Took out the B point of an A to B equals CD. That was 67.43. Only volume there of 2.6 million shares, taken out with a wide-ranging bar and massive volume, we might add, 12 million shares. No 3-gap play to the upside inside of C-Trip, so it wants wants higher price, and that is the trip it's taken, $86.49. Expedia.com, it's up 6.5%, up $6.80. It too is gapping up. I didn't take a look to see who was out with earnings, if either, or what was going on. But nonetheless, this thing is up at a new all-time high as well, up at the $112 area. We've got E-Long, L-O-N-G is the ticker symbol. That's up about 29%. What's the deal here? China's C-Trip buys. There we go. Well, that's why E-Long is up. So that's C-Trip's. Well, they bought a 37% equity stake in E-Long, so they must be in the travel business out there. That's what's behind that. We don't need to take a look at that. Let's go take at Shake Shack out here. Now, as a youngster, in my young age, I played hockey. Love the game of hockey. Congratulations to the Anaheim Ducks last night, being able to take that game from Chicago at home in Chicago. Good game for sure. And they're up 2-1 out there. As a youngster, though, I took a puck. And the question is, do you know how to snatch a puck out of do you know how to snatch a puck that's going at, I don't know what the mileage is, 40, 50 miles per hour, more than that. This is a young age, so I'm in my teens out here. Young teens, I believe it was, 11, 12, something like that. Maybe even younger than that. But anyways, I can't remember. My mind is blank. You'll probably be able to know. But do you know how to snatch a puck out of thin air without using your hands? Use your mouth. Stevie did that. Lost those two front teeth, lost a bone had to be taken out, and I've had at one stage, actually, so I had to be younger, right? Because it screwed up my baby teeth from falling out. They wouldn't fall out, which was it was a real problem. There was a point in time where I had 12 teeth, 3 from each side, pulled from my mouth out there for that time period, folks. It was 6 at a time. So picture that. You understand just how much I enjoy and love the dentists. And my apology to all you dentists out there. That was at the stage where they're using that laughing gas stuff, right, or whatever it's really called out there. And that was not really a fun experience out there. It's like you're hallucinating. In any event, I lived on shakes, so I'm not really that much of a shake lover because you had to drink, you had to basically have liquids there for quite a period of time. In any event, Shake Shack for what nitrous oxide. Thank you for whatever. Where is Shake Shack going? I don't have a clue. It's going to the moon. $96 out there. I don't know. I don't get it, but maybe you do out there. Let's take. Yeah, somebody says use a first baseman's glove. They typically don't find those on the ice out there, but I'm telling you, your mouth, you'd be amazed what it can stop. Especially when that puck is coming right at you. In any event, let's take a look at things that was too much of a story. You didn't want that. Hey, let's go take a look at John Deere out there. DE is a ticker symbol, up about 4% out with numbers here before the bell. What do they do? What did they do? That's a good question. Looks like their sales and net sales and revenues decreased 18% out here. Nonetheless, this is moving to the upside. If we take a look at it, this is breaking out above its most recent swing point from the trading day of February 18th. That high out there, 92.78, volume of 5.9 million shares. You've already done 1.2 million shares today, so it's taking that level out with some volume. That's an A to B equals CD to the upside. If it can close above that area, the number to be watching inside of John Deere is going to be 92.78. If, in fact, it closes above that level, then John Deere will give you the small A to B equals CD up pattern out here. And this is the daily chart that we're looking at. The small one says 95.5 or 95.40 out there. And that's moving to the upside. Let's go take a look at what's moving to the downside. We've got Autonomy, OTIC, as if this was an old friend. It's not. It's down 19%. Don't think we've ever taken a look at this stock chart out here. Looks like a maybe in the biotech area. I don't know. It's talking about phase 2, so they're certainly in the drug business out here. This thing is gapping down. Where is it coming back to? So this looks like an IPO. No volume inside of Autonomy. Couple 100,000 shares, basically. Sent 400,000 shares today. Never a good thing out here. I don't know from this volume profile. What can we really say about it? It's headed lower. I don't know where this thing is headed to. Let's not spend any time with OTIC. Instead, let's go on to Kunar, Cayman. So those of you going to the Cayman Islands, enjoy your time there. Of course, you'll probably be doing some of that manna not man of war. You don't want to be picking those up, but man of rays, right? You ever do that over in the Cayman Islands? Hold on to those big things over there. That's a pretty cool thing. But in the case of Kunar Cayman, this thing is moving lower. It made a high yesterday with 1 million shares so far today, 773,000. So it's got some volume coming off of it. If this thing really gets its caboose to turn loose, this thing could always make a move down to that March 17th area, 2.8 million shares where this thing broke out. If it gets down there, that might be a buy. That is at the 29.52 to 32.01 level. It's got to get below 47 and 46.37, the May 13th level, with more than 1.5 million shares before it even entertains doing something like that. QUNR is the ticker symbol. Let's take a look at Esperion Therapeutics. Don't know if I got that right, but we're going with it. ESPR versus N is the ticker symbol. This thing this morning moved right down into its point of control at the 100.73 level. That's where buyers and sellers have been the most happy with accumulating and or selling their positions. This equity here broke out on March 17th. Wide price spread, accelerated volume, 5.7 million shares to the upside. Price, in essence, this morning came back to test the top of that level from March 17th. A nice buy on this equity would probably be around 77.29 or so on light volume. ESPR is the ticker symbol. Let's go take a look at Jumai International Holdings. JMEI is its ticker symbol, off 7%, down $2. Again, we're looking at a daily chart out here. Had nice volume yesterday, so it's got volume up at those highs, but that volume was only 5.6 million shares, whereas today so far in only 17 minutes of trading, you're down with 1.5 million shares. What is this doing? What is this doing is the question out here. It's just pulling back until it breaks below 24.24. All things look okay for Jumai International Holdings. JMEI is its ticker symbol. Let's see what else we've got out here that we can take a look at. You got China Cache International. Man, they are not making it easy today to pronounce all of these equities. That's off 11%. I don't see why, but it is off 11%. Let's go see what it is doing out here. This China Cache, this had a sign of strength that is trading back into this morning from April 22nd. At 1.4 million shares to the upside. You're down so far with 174 million shares. Breakout area, nice little hammer candle, nice little area where it broke out from was what, March the 25th. No idea if it gets back there, but 791 to 878 would be the number on a light volume move to the downside, and that is on China Cache. Let's go take a look at the fresh market out here. Not always that fresh. That is off about $4. What does that mean? I don't know. You have to figure that one out yourself. But right now, this thing had gapped down here this morning right into an area where it had recently broke out. This is, if you're trying to buy a breakout inside of the fresh market, well, then get your orders ready. Let's see if it's coming back with light volume. On the trading day of August 22nd, it broke out with 4.2 million shares. So far today, 400,000 shares in the first 18 minutes of trading. Now, it's not down to the breakout area yet. There's no breakdancing. That breakdancing begins somewhere between, here's your price range. So you'd have to scale in on the fresh market if for some reason you were wanting to get into a long position. Somewhere between 29.32 and 31.10 is your area. You want to see it start to pull back with light volume. And on a light volume day today, there's a bit of volume inside of TFM, the fresh market. Dollar Tree, let's go take a look at Dollar Tree. That's off $1. Why do we want to take a look at Dollar Tree? For no reason other than I just said, let's go take a look at Dollar Tree. Now, if we take a look at Dollar Tree, quite a bar yesterday, just a outside day out here. You know, does it have a whole heck of a lot of meaning? Dollar Tree has a lot of meaning down here at the price point of $64.27 to $67.08. This is Steve Rhodes with TFNN on your wonderful Memorial Day weekend. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's off 23. S&P is down about 2 points. The composite's up $5. Russell's up about 28 cents out there. Gold's flat. Silver is basically flat as well. So let's try to round out what it is you should be looking at for the day out here. If we take a look at the summation index for the 3 indices out here, we can see right now the New York Stock Exchange is below the zero line out here. Also, a little declining tops line out there. So if at the end of the day today. What's the number? 273, 274 or more net declining issues out here. The sellers at the end of the day will have taken control of the New York Stock Exchange. In the case of the NASDAQ Composite, still in bullish fashion out here, bullish mode. Looks like it really does want to go ahead and try to tag that April 27th high out here. However, today, if there were 444 or more net decline issues, its price oscillator would drop below the zero line out there. That says that sellers would be in control. Right now, you can see that the Dow's price oscillator, if you're looking at the bottom portion of my screen out here, it has dropped below zero. So we've got 2 out of the 3, but we have a long time left in the trading session. I will tell you that today, specifically, there is more than there's a 2/3% chance, a 67% chance that today is an up day for the Dow above yesterday's close out there. If it doesn't, and you see 20 or more, I think it's 20 or 21, we'll go 21 just to be safe, issues that trade to the downside, even by a penny out there, the price oscillator inside the Dow will be below the zero line out there. And then going into the holiday weekend out here, it says, okay, we know that Asia wants to trade up over the week or on Monday, at least the way that things closed today, but maybe come Tuesday when, our futures market should open Monday night. It's open Monday night. I got to go check the hours out there. Maybe it opens Monday evening at 6 p.m. And either way, we'll if we do see some moves to the downside inside the Dow, inside the New York Stock Exchange, we'll have 2 of these 3 that will be pointing to the downside. Of course, the composite can join along. It's just going to need 440 or so net declining issues. Folks, have a terrific holiday weekend. Be safe out there. Drive safe. No texting and driving. And put the phone in the glove box while you're driving. It can wait until you get to wherever it is you're going. I'll look forward to seeing you again come Tuesday morning. Stay tuned. The Bull Bear Nadex binary option hour is going to be up next, and our man Tom O'Brien will be up with the market. Take care, folks.